Hey everybody, it's Braden here from Royal LePage, Little Oak Realty. Welcome to my housing market update for October. I'm glad to have you with me here. We did experience a pretty major jump in sales from September to October, and there were a couple of other things that I think are important. So let's jump right into things here. Yes, the Fraser Valley market made a major comeback. Well, here is what you need to know. Some key highlights here. We are back in balance with a 15% sales to actives ratio or selling rate. This is important because the previous month, we were in a buyer's market, and now we've actually bounced back to a balanced market. So this is another sign that the market is starting to potentially turn a corner. We still have elevated inventory. New listings were down 5% from September, but overall inventory levels rose 34% year over year. And there are some other reasons why inventory remains elevated, which I'll expand on in the next slide here. But important to know that inventory levels are still high, even though it does seem like sales are starting to increase. Prices are still going down. This is important to know as well. Prices dipped for the 7th month in a row, and they were down about 1% month over month in aggregate. So going back to my handy dandy table here, what I wanted to show you, just so that these numbers aren't misleading, which I feel like they can be sometimes. Yes, sales were up 35% month over month, but look at the 10-year average. We're still down by 14%. So even though you may be hearing on the news that sales are up dramatically, which they are, the market is still not even back to normal yet. It is still depressed. Current events to keep an eye on here. We have the Trump presidency. What might this mean for Canada? Will he engage in a trade war? And if he does, which means he will be placing tariffs on Canadian imports, that could cause our economy to become depressed. And that might hurt our Canadian dollar, and it might make the job of the Bank of Canada to cut rates even more difficult than it is already becoming. The Bank of Canada wants to keep cutting rates. Absolutely, they do. The Canadian economy is still weak. We have high unemployment and low productivity. So they want to cut those rates to help stimulate the economy so that things don't become too depressed and too slow. However, on the other hand, the US economy is still strong. With Trump coming in, the markets have been ripping. And that is going to complicate the job of the US Federal Reserve because they want to keep cutting rates too. In fact, they did cut. They cut another 0.25% off their rate at the last meeting. But Jerome Powell, the Federal Reserve Chair, he did say the pace of cuts will become slower because of economic uncertainty due to the Trump win. Now, unfortunately, the Bank of Canada desperately needed the US Fed to continue cutting rates because what happens if the rates between the two countries become too different, say rates in the United States are significantly higher, then investment money will flee Canada to the United States, and that hurts our economy even more. Anyways, I hope you enjoyed this housing market update. If you have any questions for me whatsoever, please don't hesitate to reach out. Bye now.